All right, looks like we're live. It's just 5:31, starting just a moment or two late. Apologies for that. Just getting organized, and it's a beautiful day outside. If anyone can hear me, can you just give me a little confirmation? Just say yes or something like that in the chat. Perfect. Thank you, Boss Yay. I'll just call you Boss. I like that better. I'm not sure exactly how to pronounce it. All right. As always, I like to keep this tight. Happy to take any questions. Just throw them in the chat if you have any. I'll run through what we got and start off with some of the things that really stood out to me. I got a little sense of humor with how strong semis are, commenting it looks like they could beat up Superman during this rally. I started off saying like they've been up since March, but I guess they were technically down on April 2nd. But they've had a hell of a run. Let's jump into the charts. Starting off with the E-minis, you can see we had a really healthy consolidation, which I've been calling for since about here. We definitely needed one, and I'm not sure we're done needing one, but we managed to push to a new high late afternoon on Friday. Still very healthy, and the most important observation, which we'll see here, is how aggressively dips are being bought. You can see them every time we get a little bad headline, and almost all of them seem to be pre-market. I guess this one's midday, as I recall. But you get a little dip, and people are just rushing in to buy them. And you can see where we closed at the end on Friday, right at this new high. NQ, even stronger, led by the semis, obviously, really strong. Same action in that the dips are getting bought. We still get these pushes down, but NQ couldn't even come close to pushing to that old high. What is that? That's a few 100-point difference. And then just a relentless push higher on Friday. This continues the same action we've seen since the bottom at the end of March. I think we have CTAs going to work. We have cash on the sidelines, and I also suspect we have overseas flows where we're the best house in a bad neighborhood. I think everyone knows about some of the headlines we're seeing out of the Middle East and a lot of questions we have about how that's going to impact the global economy going forward. But for right now, the focus is on just how much money is being spent and made on the AI build out, and all of the earnings revisions ratcheting higher primarily out of semis and everything related to AI and the NQ. Continues to be the case. Massive week of earnings this week, particularly with Thursday, where it's something like Apple, Amazon, Netflix, and NVIDIA all Thursday. Don't quote me on that. I know that we have 4 of the majors on Thursday and a bunch on Tuesday and Wednesday as well. It's just a huge week for earnings, and the setup is bullish. You can make the case that, okay, the earnings going to come out. We've got a setup for a continuation. There's also an argument that you could make, hey, now the earnings have to be so good we can't meet reality. The only thing I want to emphasize is that we are at new all-time highs, and there are no short setups at new all-time highs, period. You might get lucky and, pick a top or something like that, but that's all it is luck. You can have your first breakdowns, you can have, failures, you can have reversals, there's things like that. But as of right now, I see 0 short setups here. I want to emphasize that. Russell 2000 small caps, also very healthy consolidation, just didn't get the push higher like we saw in the NASDAQ and to a lesser extent on the E-minis, but still at all-time highs and looking very healthy. Going to spend a minute on the dollar. I've been talking about this on and off since I think August of last year. I've mentioned that this is an extension of a 15-year trend line. The bottom of this is in 2012. This is the second test, and this is the third test, a brief break here back in January. And this I'm viewing as a test this week. It came back down, tested again, got a little bit of a bounce higher. If when this goes, I think it's going to be a very big deal. I can't emphasize that enough. We saw what happened to gold and silver last fall when things were weakening and the dollar was weakening. It wasn't that linear as the dollar weakening, but there are definitely a flight away from the dollar trade going on, like we saw with gold and silver last fall. If this trend line breaks, I think that game is back on, but I expect energy to be the primary beneficiary. Gold, silver, a bunch of other things will do well also. But just the setup for energy looks really good right now, and we have the fundamental tailwind as well. This can continue to go sideways. I just think with a 15-year trend line, the setup is that if when one of these level of breaks, it's going to go. Certainly could go higher. It hasn't happened yet, but I said a couple of times in the report, this belongs on everybody's radar screen. I really think that that's the case. Briefly, we'll do treasuries. Again, I think these are being suppressed by, I'll call it the plunge protection team. I don't know exactly who it is, Besant. The range is just so small relative to historical range. Kind of ever since we took over in January of 2025, it's been sideways in a historically tight range, and that continues to be the case. Also the same for yields. This is going to break. Could be tomorrow, could be, December 2028. No idea when, not trying to make any call there. More just an observation about how tight the range is. And if when it goes, it'll be something to see, but I have absolutely no insight into that whatsoever. Overall view. This is where I just kind of sum up my view on equities, and we're consolidating at the highs and dips are being bought. There's a lot of reasons for concern, but as I said just a moment ago, there is no bearish setup here. You're just making things, creating things if you see a bearish setup here. There is not one objectively. Same thing with the Qs. Dips are bought and the index is resolving higher. Will it reverse at some point? Of course, but no idea when, and there's nothing I can look at here that says, okay, this is imminent. Yes, it's extended. I'll give you that, but it was extended here too. So don't get over your ski tips. This is something I saw from top-down charts. They do a great job. I look at them regularly. If you don't follow them on Twitter, you should. And this just highlights what a move we've had in semiconductors since this started. All-time high in market cap weighting. Semis alone are 14% of the market cap of the S&P. Technology overall, I think, is 31 or 32%. Obviously, huge, very important sector. Historically, these tend to return to some kind of a mean, but I don't know what that mean should be. Just highlighting that this is a huge move. That's literally the only takeaway there. Russell 1000 value. I have charts in here historically, and I compare value as a kind of a catchphrase versus growth. And value leading when it's AI that's taking us higher is very interesting to me. AI names are typically growth, classified as growth names, and they're doing very well. They're clearly the leaders, but there's something else going on that's being captured in this, and it's been the case for some time. Growth has led, arguably, since the beginning of QE back in 2000, I guess 9 or 10. And I could maybe I'll do that next week. Do a longer term comparison. But this leading the charge right now is very interesting. This is Russell 1000 growth, IWF, ETF, and you can see on this profile right here, we're right to a resistance level, a lot of volume down here, very little above. This will act as a resistance level. I don't know if it stops anything. Recent history suggests it won't, but just something worth noting. This is something else, IWM over the QQQ. When this broke in the beginning of 2026, I started thinking that small caps really could potentially outperform this year. There is historical precedent. We're back down to, I'm reluctant to call it support, but there's no doubt that it's a level, given that it's a ratio. We need to hold here and start moving back higher if small caps are indeed going to outperform this year. It's been a big week last week for Mag 7. We'll see that in the chart in just a minute. But also the rally really called into question the outlook of this. So the rally since the end of March really called into question my view on this. I still am sticking to my gun so far, but I definitely have some doubts about it. FXI, China really did not participate in the bounce, particularly relative to what we've seen here. I compare it to EEM, ex-US opportunities, not Europe, anything like that. But this is a pretty tepid rally and just really rolled over. Not leadership, not where you want to be allocating a lot of funds right now. There's certainly opportunities, but the charts just are less compelling, particularly when you compare it to this. EEM, this has a lot of Korea and some semis in there that I think are contributing. But that is just a really powerful chart compared to the very tepid FXI. Breadth. Let's take a moment here. This still is absolutely a healthy level. And this is simply, I'll highlight it again, percentage of stocks over the 200-day moving average, which pulled back, that's a decent pullback for 1 week. at a time when we are going sideways to new highs. So the market is getting narrower, and that is potentially the start. I will emphasize the start of a divergence, because these levels on an absolute level are not bad. Just noticing that this is coming down while indexes are busting new highs is worth noting. This is the chart I mentioned. We can see like what really drove the performance last week. NVIDIA, obviously the 800-pound gorilla, but you've got Micron up 9%, AMD up 25%, Texan up 20%, Intel up 20%. These are big numbers. These are all very healthy. They're just not 20%. Amazon 5%. That's a good number. And then the big, this is all of healthcare. This is all of financials. This is consumer. Here's industrials, entertainment, I guess, over here. These are more consumers. It's kind of your staples, more defensive, are pretty strong. But this is an interesting chart for me. Or not a chart, you know what I mean. Industrials pulling back. And again, it's not scary, but just it is very clear that just one pocket of the market is dragging us higher. That is my takeaway here. For new all-time highs, for consolidation after an extended move, there's a lot of red, and we're still making new all-time highs. Again, I emphasize there is no setup for a short here, but this says, okay, be cautious, be careful, and just look for a setup that may appear. There's not one yet, but these are calling into a few things into question. Crude, again, mentioned a moment ago. I think energy is the horse going forward, and this chart right here and the next one are a big reason why. This is just a resistance zone that I've had since I identified this back in 2022. I have all these levels. I don't put them on this week. This level has been important for years, and we're back. We pushed through it, came back. You can see this, to me, is a rejection of lower prices. We tried to break down on news. We pushed right back up into it, and we closed right. I can't see exactly where we are in the close, but we're clearly back into this zone that I'm watching. If we can break and accept higher, then I think we're off to the races for a little while. And that should be a problem for the market. Energy, commodities, and stocks look bullish. This is BNO ETF. It's seaborne Brent crude and has different supply and demand characteristics than WTI, which is the previous one. And to me, this looks bullish as hell. We've got this push higher. We're consolidating the highs, and we're making a big push back up. We're almost at all-time highs. Very close here. 54 on the ETF does not correlate to an absolute level on Brent. I keep hearing, and I'm sure all of you do too, about how the physical price is $50+ above what paper price is, i.e. what the futures are pricing in. It's great to have a futures contract going for, I think, $110 or something like that. But if you really need to buy a barrel, you're paying like $170, $175. I've also seen commentary that says product is going to be what really drives the situation in the energy market, specifically jet fuel, diesel, and gasoline are all even in shorter supply than crude oil on refined product. So maybe I should put some of these on the charts. I'll look into that for next week, but these are all things to keep an eye on. But energy and crude looks very bullish to me. I don't think we're done going higher. Natural gas, okay, this one's pulling back, but this is a gentle pullback for this commodity I call the widowmaker. It's killed people on every spike for years. We get this spike, and this is just a kind, gentle pullback. I've mentioned before all the supply that came out of Qatar. People who know a lot more about it than I do understand the fundamentals, but this is not bearish. It's not compelling, but it's not bearish. And I am looking at this level, all the supply. If we accept back down in here, we could absolutely pull back lower. But this is a support level. Let's watch and see how it responds here. Gold. Again, not bearish. We broke the 50-day here, a big pullback, 150 held, went back and tested it almost to the penny. Now we're going sideways. I'd highlight the Fed meeting Tuesday, Wednesday of this week. No idea what they're going to say. No idea what expectations are. But this could respond dramatically. Let's see. I don't think this bull market is over either. I do think that after this move, yeah, some sideways is to be expected, and it easily could keep going sideways from here for a little while. Overall, constructive, let's call it that. Bitcoin, which has been dead for months, just a sideways move when everything's gyrating all over the place, finally a little push higher. Let's see if it can follow through, could easily roll over, but might be joining the risk on rally. I found it very interesting that it essentially ignored it. Or let me rephrase that, had a much smaller move compared to history. This has been an incredibly volatile asset, and this is a very tempered move compared to history. Energy equities. Again, these are short-term charts. These are 5 minutes only, cover a little bit more than the past week, so there's not too much to see from the actual charts here. But overall, they look very healthy. Valero is my proxy for refiners. They look great. XLE looks really good. And I mentioned another one that I might try to figure out how to get in here that looks good but is much less extended is the oil services ETF, OIH. That's breaking higher from a much lower level. It was really high back in, I think, 2010 to 12. It's probably 50% lower than it was then, but it looks like it's constructive and starting to make a move. Technology, this says it all. This is your month of April. That's K-Web, let's ignore that one. This is the semis right here, SMH. This is XLK. Very bullish, and even IGV, the software, which has been getting beaten up so badly, is participating as well. These have resumed a leadership position in this rally, no question. I mentioned again, big earnings this week. Let's see how they respond. A lot of big names, and let's see what we do here. Key sectors, some of these look really good. XLY looks pretty good. XLV has been disappointing. I'm a little surprised at that with all the GLP-1 noise that we have and all the product and sales that are coming out of there. Industrials look really good. They're pretty close to the highs. Pulled back a little bit, didn't rally this week. And financials are intact, but not doing great. No complaint. I don't want to say not doing great. They're intact. Long term, I want to spend a second on this. This is something I emphasize. This is a logarithmic chart which incorporates the change in the absolute value over time. Geometric. It accounts for compounding is the best way to put it. And this is the NQ, which again, this is the 2009 low. You can see how well this has held this over time. It really respects the channel, but it has pushed out a couple of times and then reverts down. It tried it back here, and now we're busting out of the top of the channel again. This is just yet another cautionary sign. We're like, okay, look, how extended can we get given that this is a logarithmic function that incorporates compounding? A lot has to be happening, and a lot is happening. And to be pushing out, but this is something I always pay attention to. I have redrawn this chart on a shorter time frame to account for this acceleration, and perhaps I should think about that because it's going to keep going, but I'm just trying to highlight some concerns. IWM looks great, and that's about it. I expected some consolidation. We got it, but it's still very bullish. And the thing I'll highlight the most is dips getting bought early and aggressively. Oil looking very constructive. The dollar, which I highlighted, and breadth, did suffer last week as we didn't get the participation in the new highs. And but overall, still I would describe as fine. Thanks, Marlon, for leading the charge on any questions. Happy to take some. And I will switch real quick over to another chart so I can address them. But drop any in there if you have any. I will do individual names or happy to discuss any specific questions you have. And there's my charting software. Okay, I know we don't have a ton of people. It's beautiful out. So if we don't have any questions, I'll wrap it up. But I'm happy to take a few, and I will be commenting at 6 o'clock when the futures open right in here. All right. I'll call it there. Thanks very much for participating. If you have any questions, feel free to drop them in here. And as I've mentioned a couple of times, trying to build conversational critical mass. Feel free to drop in here during the week if you have any thoughts, questions, ideas, and participate in the chat room. That's about it. Thanks everyone for joining. And yeah, we'll be in touch. Talk next week.